All right, so just wanted to do a recap for today, March 20th, because there was a lot of confusion about what was going on. When the day started off, which this line is representing 8:30, so I'm going to remove that and get that out of the way. When the day started off, there was a ton of strength and momentum left over from previous, right? We had hit an area of support, and we had hit this area before, which is why my lines are even there, to be honest with you. So we hit this area of support, and we pull back in, and you're starting to see, in the early hours, you're seeing some potential for divergence. It pulls back into the area. I could see someone, at the start of day looking to possibly get in. I never grabbed the right one in the beginning. Looking to get in somewhere around here as it pulls back when the MACDs lead lower after the first hit. So they take that first hit, they come down, they pull back up. That to me is an entry signal. I don't start right off at the day. I didn't even start, I think I started about right here. And by that time it was way too late. But there was, when the MACDs are leading lower at the higher time frame EMA as it pulls back up, that's a great area to take an entry, probably be more likely on the second bar, and even more likely somewhere closer to here whenever you enter that trade. And because you're pulling back into this area of support, you really want to be cautious about taking your exit once you get down there. The MACDs are leading a lot higher than they were previously when we were at that area. So that's saying that you've got major potential for divergence. Now it does pull back up into the 610 EMA, which says there is one more shot at this. What you have to determine at that point is, am I going to be quick enough to get out once it gets down to my area of support, which for me, I'm typically not. I would see something like this and possibly get out, but, am I going to get out at that area of support, or am I anticipating the support area to break? Now, we've hit it several times. There is a lot of strength in the initial move to the downside because of all this distance between the EMAs, but you are starting to get that guppy belly look. Things were starting to get a little tighter, but you don't see that until later, really. So you would have to be looking for an exit pretty quickly. Your 610 MACDs don't really push down. Look at how they push down when you first hit that area, and then it stops them right on a dime. It has a weak retrace back and a weak retrace down. So it says if you're in this trade, you want to really get out of it. Then as it's pulling back in here, you would have to be like Superman to get in those trades and to get out right in time, because you're probably not getting in right at the top. You're getting in more somewhere like right here. By that time the reversal bar comes up and it's kind of over by that point. So it pulls back into this area multiple times, and when it pulls back into that area multiple times, this is the reaction of your MACDs at that area. There is not strength to break through it. Now, had those MACDs looked like this coming into that at that time, I would have anticipated breaking through, but we really couldn't get that kind of look. So once it got down there, it just died out, and then it just kind of bounces around and bounces around. And this may have been places that people were trying to take trades. By this point, I'm looking at it, I'm going, okay, so we're holding at this support area. We've got major divergence on the 1597. I mean, yes, they both go up, but look how much further. This comes up and it pulls down almost 100% of the move. The MACDs come up and they come down about 25% of the move. So even though they both pull down and they're both leading higher, the MACDs leading this much higher than the price says that there is a huge potential for this to go to the upside. Now, what happens here is it pushes through the area. So at this time, I believe I got in about right here, and then I know I got back in once this bar formed about right here. Because what I'm seeing here is pushes to the upside. We're back above the zero line. There's bars that have equal lows, but they're struggling to close at the bottom. This is a huge reversal bar as things are starting to pinch together and go to the upside. Also at that same time, I'm starting to see that really big guppy belly here on the 1597. Now, as you can see, just because it shifts momentum to the upside doesn't mean that it's going to always continue in that direction. Where I got out was my first one, it hit my target here. My second one, it hit my area quite a few times and didn't take me out. And I really could have held on for longer because there was a lot of strength still to the upside. But I was running into this EMA right here, and I decided it was time to get out as we're running into the EMA of the higher time frame. There was still a ton of strength. I didn't even talk about it in the video. There was still a ton of strength to the upside in order to hold for that extended target of that resistance that we had run into quite a few times. So had I held it, I probably would have been out at least by this bar, if not somewhere right in here after these reversal bars, which is the long tail with the close at the bottom, or the close at the bottom portion. So then it pulls back in to the 1597 and the 610 EMA, and it does give you another opportunity for a long trade here. It's got a long bar, it's starting to close back above. Yes, we have gotten below things here, but look how weakly things are moving. We do have a strong push down. So what happens when we have a strong push down and then you have this weak retracement? Tells you that once, if the price does pull up there, you're going to have major divergence, or you have major potential for divergence already by this point. So if you're getting in any of these bars, and really any of these bars are okay, because you want to make sure that you're getting in a place where your stop will be behind that previous pivot. So it's behind the areas, it's behind the previous pivot. Once it pulls up, I can guarantee you, had I taken this trade, I would be out by at least here. This would be your last chance. I would not have made it here. You know, maybe someone would hold on that long, maybe even attempt this long trade again, but this time you're getting way too close to that area of resistance, and the divergence is very, very evident in that strong push down, the weak retrace to the upside. You also see it here, which tells you that you have great potential for that trade to move to the upside. You just have to be really, what's the word I want to use? I don't want to say quick about catching it, because this bar didn't take a long time to produce, or it didn't take a short time to produce. There was all these other bars that gave you lots of opportunities, but you have to really trust it. With that distance, I mean, it gives you plenty of distance there in order to trust that long trade. But we can see what happens. The 1597 EMA never really crosses to the upside, and everything starts to push back down. So once it pushes back down, what happens here is it does pull back up. It has very weak movement in the MACDs here, and then next thing you know, the MACDs start rolling to the downside, even though the price is just sitting here. When that happens, that tells you don't take any more long trades. By this time, you're getting back below the zero line on the 1597. And it does pull up here, which some people I could see possibly attempting a trade at this point. Strength down in the MACDs. It does die out, so you would have to be pretty quick, or not quick. You'd have to be you'd have to be paying attention to make sure that once these MACDs die out, it pulls down right here, and then it can't go any further to the downside. So maybe even catching something about this point. Then it pulls up, pulls back down, it pulls up again at this point. There's a little bit of divergence where the MACDs are leaving just a little bit lower here. Whenever it equals this point. My children are having a good time. That's all that matters, right? It pulls up. It's below the zero line here on the 1597. So it's giving you, hey, whatever. So when it pulls back at this point, it's telling me that yes, the EMAs here, and you know, I know that not everybody uses these EMAs, but I do really pay attention to the crossover of the EMAs. So I'm looking for the potential for these to cross over, which they do here, and so they stayed open between these at the 1597. So at this point, if you have the kahunas to go ahead and hop in right here, if you're looking at the higher time frame, you might just as well do that. But then you get to the, what happens here is things kind of, you flattens out. It's not really pushing down really hard. It was at this point, but it really does give you a great place to exit the trade. And that would actually be right here. I may even go as far as trying to get out at that point. It pulls back into the area, which you may have attempted a trade here. I don't see any problem with it. You would just have to be really intuitive whenever the exit is taking place. So you can see that the MACDs are leading a lot higher. Price never pulls down. And if you don't take an exit here, there's a chance that you're either going to get a little bit of a loss, since your stop would be somewhere probably right even with this, so it may stop you out. And then it pulls down and it pulls right back in with those EMAs still on the proper side. At this time, you're breaking back down below the zero line. You're just rolling off the areas on the 1597. So when it pulls back right in here, that is just golden for a short trade. I didn't happen to be here at this time, but that is just beautiful. You've got a long tail with a close at the bottom. So if you're just watching off of this, you may get down somewhere right in this area, the double bar, the rollover. You got to get in pretty quickly. It hits that area of support, and now here is the time where you hit support and you have to determine, do I want to get out or do I want to continue? You have a huge amount of strength in both the MACDs to the downside. It doesn't really slow down until right about here, and at that time you're slowing down on your 1597 as well. So you have a couple of options. Either you have moved your stop down behind this area, you have exited, so you've either let it come back up and hit that stop, hoping that the support will hold and that you can push back down, even though the MACDs told you there's no way in hell that was going to happen. But you have this push down and you pull back up, and so instead of waiting for it to pull, thinking of how far can it pull back. So the furthest, the first area is right here. If you're getting out, whenever you're seeing a slowdown in the MACDs on the 1597 or the 610, it'll be around here. If you waited for it to hit your stop, that would be around there. Or if you got up to this area and you see that it has no chance in hell of holding, you may get out somewhere right in this area. Okay, so what happens at this point is, if you let it pull back and hit your stop, that's about the spot you would be. If you were, paying attention to how the MACDs are behaving, which they're showing a lot of strength up, you're looking for the next area. So you have to ask yourself, am I ready to trade directly into an area? It's not necessarily an area anticipated to hold, since we broke through with such strength. So if you're looking to continue down, really, anything in here would have been wonderful. If you want to wait till you pass that area, by that time it's a little late, unless you're waiting for something like the pullback right in here. And then the exit for that one, these are hard closes at the bottom, but you have major divergence with the way that the price and the MACDs are leading right there. So the divergence is, bam, got some major divergence there. And so when you see that, you may go, I want to exit, or you have moved your stop along because originally it should have been back here, then possibly right here, and maybe even right there after, to go all the way down to that next area of support. And then after that, I was actually looking at some long trades here because I was looking without the EMAs, which It was a pretty cool thing to do, but we won't really talk about that right now. But at that point, it's pretty much the end of the day, so I don't really see anybody taking a whole lot through here. You could attempt to take a long at this point. There's strong MACDs to the upside on both of them, but it really is the very end of the day, so it's not something that you're really looking to continue with. So yeah, there were a lot of opportunities. It's just you have to really be in tune with what's going on. I mean, you look at what's happening previously, and there is definitely a shift to the downside where it's pulling back and pushing back down. So the overall momentum was definitely to the downside, where the immediate momentum shifted to the upside. You just have to really be cautious and pay attention to those exits in order to make sure that you're not holding for something that's not really there. So the divergence is going to be something that really shows that to you. Watching the behavior of the price action, watching the behavior of the higher time frame EMA, you know, that it's kind of staying steady here and then continuing back to the downside. And you can really see that right here, the way that the EMA looks on the higher time frame. The 1597 EMA looks on the higher time frame. So that pretty much wraps up the what happened today. And so if you guys have any questions, y'all let me know.